markets come back today after a weekend. Of course, CMEs were open a little bit yesterday, right? They're nice. Uh, but apart from that, the bulk majority of them closed on Saturday and Sundays, right? So now that we've had a nice little weekend and Bitcoin has done what it did, what is going to happen this week? Well, if you look at what happened with the VEPs and what it's indicating right now, right? What happened is you had a little bit of a nice little mean reversion, or a bunch of them, to the downside. Very, very nice. If you look at the VRE charts, you can see exactly where it made the move back up from, right? It bounced exactly up from a 4-hour target, right? Perfectly. And made its way back up to the central daily range yesterday and finished the day slightly above it, practically where it had started the day. So it was just a very small movement on the daily candle, but from wick to wick, it was actually pretty nice. And if you're trading low time frames, you definitely had the opportunity for some good scalps there, right on the trending move down and the trending move up. And if you look also, there was a mean reversion. Even up on the 90-minute, you can see that same mean reversion happen. It was perfect. And also on the 30-minute, it was just so sweet, right? There's a reason we use the RMLR. It tells you the future, right? What other thing do you know that actually tells you the future as accurately as the RMLR, and in combination with like the projection boss 2, or even just the RMLR by itself, right? And the distribution model, of course, on the PB2 also is very powerful, right? Even by itself, without the RMLR, but with it together in concert, they're super powerful. And when you throw the power mean on top of that, it's even more insanely powerful. So what device do you have that tells you the future? Most people, I would say, don't have a thing like that, and they don't know that this one exists, which is kind of remarkable. Like, it's mathematics, right? You actually can make certain predictions, right, about probabilities, and they can be extremely accurate, and that's exactly what the RMLR does, right? It doesn't tell you the exact price level. That's not the purpose of it. I mean, once it's fixed, then it's, once the RMLR is fixed in place, then it tells you that RMLR price is fixed in place. But it doesn't tell you the price of the asset or the price is going to be. What it tells you is the future direction of the RMLR. And that is incredibly powerful, right? Plus, if that future direction happens to change, you see that with the correlations that are built into the RMLR indicator. And you also see that with the direction predictor, which is built into the RMLR. It's a separate indicator, but is built into the RMLR, right? And we've incorporated that direction predictor into a number of other indicators as well. But I'm pretty sure, if I remember correctly, the RMLR was the first one where we actually put that direction predictor as part of an indicator. So in any case, we had a nice mean reversion, closed the day above the central daily range, and then today, the new week, you had the new weekly range set in place, and you also have the new central daily range. And the new central daily range happens to be a little bit wider than yesterday, but still fairly tight. Not too wide. Tight enough to be probably a trending day. And so that is probably what we're going to see. We're going to see some trending moves on the 15-minute or lower time frame. I would definitely expect to see that. And it would not surprise me if we see the asset begin to make a move in the run-up to traditional market open. Right? That would be a fine time to see a nice move being made on a Monday, sometime in the run-up to traditional market open, or shortly after the bell rings, or within an hour of that time. to see a nice size move relative to the time frame. And yeah, it's certainly, I mean, if you look at the daily ranges of the VRE, that completely irrelevant 100K level, which is statistically insignificant, okay? It doesn't hold any particular meaning statistically. Like, it may happen to be, like last week, I think it's Saturday or Friday, this past Saturday or Friday, there happened to be a target just around there, but like within a few pennies or whatever. But there's no significance to that number statistically, right? Every other day, there isn't a target exactly at that number necessarily, right? It's not, it has no statistical significance. It just has psychological meaning to people. And people are the ones who make the most mistakes when trading, right? They're the ones who get wrecked because of their own psychology. Bots that do most of the trading, they don't have psychology. They don't have emotions. They just trade, right, according to the numbers. And that's why they win most of the time. They don't care about feelings. Oh, I feel it's going to do this. Well, then you're wrong, right? Even if it goes that way, you're still wrong because you placed your money on feelings as opposed to maths. And statistically, you should place your money on the maths, not on your feelings. How do we know that? Well, take a whole bunch of trades, see which ones were placed on feelings, see which ones were placed on statistics and probabilities, and show me which ones do the most winning. I guarantee you it's going to be the ones that are done on maths. Why? Because that's how the markets move, right? That's how these big bots run. These big bots are running millions of trades per second. Okay, they're doing it based on math. They have huge bags to position. They split their bags over many, many different assets. They literally buy a little piece of every asset, and then they sell a little piece of every asset, right? Sometimes they do it together, sometimes they don't do it together. But they buy, meaning sometimes they'll do a whole lot of buys at once, sometimes they'll do a whole lot of sells at once, sometimes they'll mix it up like crazy, right? In any case, they're doing a whole lot of each. Whether it's, more than 50% buys, more than 60%, whatever, or it's just like, however they do it, they're buying and selling every second, a million orders or more. How do they do that? Well, they're super fast computers, right, running massively powerful algorithms that are managed by hundreds, if not thousands, of engineers, salespeople, traders, managers, support people, DevOps people, BI people, quants, whatever you want to call them, right? They're all over the world, 24/7. They're not. It's not like one computer in one location. No, they're massive computer systems connected throughout the world, and they happen to be placed as close as possible to the various markets that they are connecting to and trading on. So they buy servers literally on the same rack or next to the same rack as the exchange servers in the place that they locate their servers for the exchange, and they buy the best possible direct fiber connection from their servers to the exchange servers. Literally, they pay for that, right? They pay the exchange for the right to plug in their cable to their servers at the same hosting location. And you wonder why they get faster speeds than you, right? It's because they're literally plugged into the exchange, and they pay for order flow info. They pay for all the order book info that you can't get as a regular retail trader. They get it well in advance of you in terms of their computer's ability to exploit that difference, right? So instead of trying to out trade the bots that trade millions of trades per second with massive bags, what you can do as a human is to use the same information that they're using to trade at a human speed, right? And to trade, instead of trying to beat the bots, all you're doing is picking up the crumbs that they're leaving behind. Think of it that way, okay? They're taking the bulk of it no matter what, okay? But the people leaving crumbs all over the table, that the bots don't even care about, they're leaving them there for you if you have the VEPS information. Okay? Now they will eventually take those crumbs if you just leave them there, but they're leaving them there because they can't be bothered with them while they're running other trades. They have sweepers that come in to pick up those differences eventually. I know it sounds a little bit complicated, but basically they'll run trades to pick up whatever was left behind at some point. Sometimes they'll just leave it, but generally they'll go and send something to pick it up. How is that done? It's done with programming, right? Like all things that they do, because they are programs, right? They're software. And you as a human trading the VEPS need to understand that you have leading information. You have a quantitative edge that 99.9999% of the retail public doesn't even know exists, okay? Yeah, they may have heard of the term Black-Scholes. They may have heard the names Black-Scholes, right? They may have heard the term, the Black-Scholes options formula, or the Black-Scholes formula, but they don't really know what it means, right? They may have heard of the term volatility, but they don't actually know really what it means when it comes to actually using volatility in regards to trading, right? Like they don't know that returns lead and price follows, right? They don't know that the standard deviation of returns is volatility, not the standard deviation of price. It's the standard deviation of returns, right? The delta of the price is not the volatility. It's the delta of the returns, the standard deviation of the returns. If anything, it's the delta between the ask and bid that is the data around the mean, right? And that's the variance of the data, right? That spread between the ask and the bid is data around the mean, but that's around the mean of price, right? And what we're looking at is the variance, which is the data around the mean of returns. That is volatility. That is what variance is. It's not the delta of the ask and the bid around the mean of price. It's the delta of the ask and the mean around the ask and the bid around the mean of returns. That's why we use the mean of returns. That's why if you look at Bitcoin today, does it have a probability to run up to 100K? Absolutely it does. Does it also have the probabilities to go down to like 90 or 94? Yeah, there's absolutely targets around there. Okay, 93, sure, there's targets there. There's also targets below that, right? Well below that, in fact. Does that mean it has to go there? No, it doesn't mean it has to go there. Not every target will get hit, but there are targets, mathematical, probable targets. And if you take the most likely probability on any given time frame, and you are consistently doing that, not doing it sometimes and then switching up to something else sometimes, but consistently taking the most likely probability, then you will most likely be correct most of the time. Okay? Now, how often you will be correct depends greatly on your execution of your actual actions, right? Like where you actually enter and where you actually exit, right? Which is why you got to keep an eye on whatever you're trading. You don't take your eye off the ball when you have real money on the line, right? It's very different than investing. Investing, you just like, okay, I'll buy, it generally looks good here. I mean, yes, you can use the VEPS info for trading and for investing, but you use the VEPS info to invest. That means you just buy at a certain price and you just hold it for whatever long period of time, relatively. Hey, buddy. Yeah, hey, look, good boy. Good boy. Ja. אבל הוא מכיר אותי שהוא היה קטן. כן. נכון. He's a good boy. He's a כלב טוב. Good doggy. Good doggy. All right, יום טוב. See you, buddy. See you. Ciao. There's this little tiny dog. Well, he used to be tiny. Now he's huge. And he runs to me like crazy. Hilarious. I love it. Every time he sees me. And he doesn't run like that to anyone except his owners and me and my kids. That's it. Yeah, he's a good boy. Well, he knows me from the time he's a little puppy, and I always treated him like very nicely. So, anyway, so VEPs, you can use the VEPs. Like I said, you can use the VEPs to understand what's going on, what is likely to happen, and even on today. And if we look at the charts, you can see very clearly, right, that the targets definitely include the mythical 6-digit figure. Right? It doesn't matter, right, if it gets there or not. Like, as a trader on low time frames, you really should not care what the price is. It could be $500,000. You shouldn't care, because you trade whatever you can put in your bag and whatever you can use from your bag. You don't try to trade, an amount that you don't have, right? You trade only what you actually have. So if you happen to have, a fraction of a unit, well, then you're going to make a fraction on the P&L, right? So it moves 10%, but you only have 5% of that unit. Excuse me. If you have, let's say, 5% of a unit of a Bitcoin, and it moves 10%, you're clearly not going to get the same kind of returns. You're going to get 5% of that 10% of returns, right? Anyway, that's going to do it for now, folks. Hope you're all well. If you want to join us, if you want to join the Alpha Trading live stream, that starts at 9 a.m. Eastern Time, Monday through Friday. So just go to alphatradinghq.com/Discord and just join the live stream there. It's free. You got to do the free indicators, and you can actually also join into the live stream with your voice. If you don't request the free tools, you can still join the live stream. You just won't be able to use your voice, but you can still participate by chat in the live stream. And you can also watch it on Rumble. And we post the links to that in our Discord, usually about an hour or 40 minutes or something before the live stream starts, and on Twitter also. So, okay, guys, happy trading. See you.